start, Governor Waller.
Just call me Chris.
Chris, okay, Chris. Let me start with the jobs data we got yesterday, which I think is, people are wondering how the Federal Reserve is processing and how you're personally processing this data here. We had a tick up to the unemployment rate at 4.6%, return to job growth in November after job losses in October. What's the state of the labor market in your opinion?
Well, earlier this summer, when the jobs numbers were looking very good, I had a lot of anecdotal evidence talking to CEOs around the country and other sources of soft data that told me the labor market wasn't doing that well. People were kind of like, what's he talking about? And then the August 1st, the July jobs report came out and everything was revised down pretty dramatically. And so we've now come around to this view that the labor market is very soft. The jobs numbers are around 50 to 60,000 the last couple months on average. We know that that's too high, and those are more likely to get revised down when we get the unemployment insurance administrative data later. It'll take a while before we get that, but board staff is estimating take off another 50 or 60,000 jobs. So we're close to zero job growth. Now that's not a healthy labor market. Now we expect that to kind of come back in 2026 due to a lot of tariff uncertainty going away. Our rate cuts have helped try to soften things up going forward. That was the whole point of doing these preemptive rate cuts that we started in September. And then also a lot of the fiscal bill will probably have some impact. And then, we'll see if the AI stuff really starts kicking in with serious measurable productivity. So 2026 could turn out to be a better year in terms of that. Now, whether that pulls the labor market along with it, I certainly hope it does. But right now, my focus as a governor has just been to focus on the labor market. Inflation, I'm not particularly worried about. I know it's above target, but I believe it's coming. It'll start coming down the next 3 to 4 months. And so the critical thing for me is the employment leg of our dual mandate, and then inflation will come back down. And we see that when you look at market pricing, inflation expectations, tips, and things like this. It's pretty well anchored around 2%.
Chris, if you're already at zero, does that mean you're behind the curve?
Well, that's what I'm saying. What we don't quite know is how much of this is like AI driven. When I go around and talk to CEOs around the country, everybody's telling me, look, we're not hiring because we're waiting to try to figure out what happens with AI. What jobs can we replace, what jobs we don't. That sort of stall in hiring could be just temporary. After a while, people are like, nah, we still need these people to do this or that, or they don't. So we don't quite know yet what the AI impact is going to be on the labor market. But I think we got started cutting in September. I think those cuts will come in as we go forward in the next year.
For the record, you wanted to cut in July.
I wanted to cut in July, yes. I felt like it was needed. That was before we got the jobs revisions. Again, people thought I was nuts, but the data came in and said, look, that guy was right.
I want to go back to the same question, though. If you're already doing a goose egg on jobs, are you behind the curve and is further stimulus needed now?
Well, I personally, I don't speak for the committee, but I personally think because I don't think inflation's there's not going to be any reacceleration of inflation. There's no forces that are suggesting that inflation's going to take off again in 26. If anything, the tariff effects, whatever they may be, those will start coming off as a one-time price effect. So we're not going to see persistent inflation from it. So if I believe inflation is under control, inflation expectations are anchored, standard central bank wisdom is you look through one-off price effects like a tariff would be if it has inflation effects, then the labor market's telling me we should continue cutting the rates. And that's kind of my view about things.
And the journalist central bank reporter handbook says to ask the governor, how much should you cut rates?
Well, I don't think we're not seeing a dramatic decline of the labor market going off a cliff.
Right.
It's just kind of just continuing to just soften and soften. So we can go at a moderate pace. I don't think we have to do anything dramatic. If you have to do something dramatic, it's too late usually. You've waited too long.
So